is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Andrew, it's been quite an eventful 2-week period in the crypto world. Last Tuesday, the Genius Act passed the Senate by a very wide margin, 68-30, which means there was broad bipartisan support for this legislation. The law puts in place some rules of the road for crypto and specifically for stable coins. Broadly speaking, it's viewed as a positive, though the crypto industry has its critiques with the law. But what's happened as a result of the passing of this law is we've seen a trend in the market, which is crypto equities doing well, really kick into overdrive. In the day after the law was announced, I think Circle was up over 30%. That's part of a broad-based rally that's seen the stock climb, I think, 250% since its IPO less than 3 weeks ago. And also, we're starting to see some other companies start to participate in that trade. Weirdly, I mean, Bitcoin's up, right? It's like close to $106,000, but most of the crypto asset world isn't really participating in this. We're seeing this bifurcation, which you and I have discussed in the past, of crypto equities actually outperforming the crypto market as more mainstream investors are looking for exposure to this technology and to the underlying asset class, but also as more crypto natives start to see the public market as a way to gain exposure to what's going on and as a way maybe to maximize the value of these assets because of the scarcity premium that's put on some of these businesses as they're only a small number of good quality public companies in the space. So just kind of want to get your reaction post Genius and everything that's gone on. And then, of course, we can talk about the Iran war and the shortest bear market ever in crypto after that. But what's your take on what's going on in the public markets?
Yeah, it's full-blown speculative mania in terms of stablecoin related companies. I mean, Circle at one point flipped Coinbase, which like the market cap, which is crazy because Coinbase, I believe Coinbase makes about 55-60% of the income from Circle's only product, which is USDC, and then on top of that has the biggest US exchange in the world and like a whole regulatory and a whole institutional platform. Yeah, so that was completely insane. I think like now it's interesting. Like as we speak today on Tuesday, we're starting to see a little bit of a convergence there with Coinbase. Coinbase is up 11% today, whereas I believe Circle is down 12% today. So like that sort of like that flippening is starting to unwind, but that was something I never would have thought would happen. And I think partly that's just maybe due, Circle's just a bit of a speculative mania post Genius Act, as well as just the fact that it's only about a month post IPO and there's not a lot of shares outstanding. Yeah, I mean it's a continuation of the trend we've talked about a lot. The speculative capital continues to be in the equity markets, and the altcoin market continues to fall. Bitcoin dominance it keeps reaching new highs, and if you add Bitcoin dominance plus stablecoin dominance, so like if you look at Bitcoin plus the market cap of Tether and USDC, yeah, I believe it's like not it's at some of the highest ratios it's been in a long time, like since.
So when people do that Bitcoin ratio, are they including like Tether and USDT or USDC? Because I've never actually really thought about that, because those names are now meaningful enough that they would actually change the ratio significantly, right? Like you're going to strip out $250 billion of stable coins from a market that's only 3.5 trillion in size. Like that's going to skew the ratio even more.
No, that's what I'm saying. I'm saying this isn't Bitcoin dominance. This is Bitcoin dominance plus, I guess, stablecoin dominance, whatever you want to call it, which is the market cap of USDC and Tether.
Yeah.
And that gets you close to 75% of the entire market cap of crypto. If you throw in like, Ethereum and Solana and Ripple, like that's pretty much the entire market, which is, again, a pretty reasonably big change. I guess not a huge change historically, but pretty big in the last couple of years. It's never been that high. So yeah, I mean, it's like kind of the same trend. I think that a lot of the thing that people are sort of wondering, I would say sentiment on like altcoins has never been worse. I think people are starting to come around to this idea that the altcoin market is sort of is somewhat structurally broken because for two reasons. One is there's not enough alignment with tokens and the actual success of these projects. So there's tons of tokens that don't actually like accrue value, even if the project is is actually generating revenue and actually is generating revenue. And that's why like the few projects that have alignment, so things like Aave or Hyperliquid, have done incredibly well. So that's kind of like one aspect of it. The other aspect is that the centralized exchanges have never been, I would say like most people think the centralized exchanges have never been greedier than they are now. So they're now taking like 5 to 10% of token supply, like the major ones, like the tier one. This doesn't include Coinbase because I don't think they do that, but
they're not permitted, I think, to do that.
Yeah, they're not allowed to do that. But the bigger sort of international exchanges, we'll say, they are taking huge portions allegedly. And I mean, I've talked to founders who have done these types of deals, and it's pretty egregious. And so you're creating this situation where tokens are launching with ultra high market caps, super tight supply, and then the exchange itself sort of gets to play kingmaker just because they hold such a high percentage of the supply. Typically, they pay out a large portion of that to their users to sort of use it as like a user acquisition funnel. But still, it's yeah. So I think like a lot of people sort of see the altcoin market as like somewhat structurally broken. And so the speculative capital right now is just going into either majors or treasury companies or those like few tokens that aren't really on centralized exchanges and pass back value to users. So like
yeah, it's interesting. I mean, it's definitely a phase of the market that we're in right now, and I think it's probably, I don't know, healthy in a way that there's some differentiation happening within crypto, that not everything's going up at once. I think that's a sign of market maturity. There's a time when everything was just pure beta, right? Like, Bitcoin goes up and those altcoins go up even more. And now we're seeing, there's some haves and have-nots and some winners and some losers. On the equity side, though, I find the speculative mania, as you described it, so interesting, because I'm wondering, Circle, for example, like who are the buyers of the stock at $270? At $270 a share, it's a company with, a $60 billion market cap. I believe they said that they did $160 million of profit last year. I think Circle's an amazing company, and Jeremy Allaire is a great founder, and I think I've talked about this before, that we've known each other for more than a decade. But it does seem like the valuations feel a bit overstretched at this point in time, and I wonder, like, who's that incremental buyer? It suggests to me that there are a lot of traditional investors who are looking for exposure to this asset class, to this technology, who maybe are unable or unwilling to own crypto, or find that it's not convenient for them, or that they would just prefer to own it in a consolidated account, like a brokerage account, where they can be next to their other investments, and that these companies are fulfilling that very simple but important role and giving people a way to gain exposure to this asset and diversify, from other parts of their asset mix. Like, it could be that simple, right? I mean, I think it is that simple, but it's just, to me, it suggests that, we could be in for IPO season for crypto companies. Now, we've seen some already come to market and others file, but there's a really long list of good quality businesses that have been on the sidelines waiting to go public. And I wouldn't be surprised if they use this window as a way to do that and get some much needed liquidity, for businesses that are a decade old, have been profitable through bull and bear markets, and have a lot of people who've been very patiently holding those private shares for a long time.
Yeah, another thing too is if you have a equity market that's this hot, a lot of projects that haven't yet launched a token may decide to not launch a token and just go public, or essentially get acquired by a traditional public equity player. You know what I
Wouldn't
mean?
that be
So like,
wouldn't that be a strange twist? It's like when token,
yeah,
it's like when go,
yeah,
you know?
I'm sort of doubtful on the mechanics of that because um, like the whole point of having a token is that you can reward your users, your earliest users,
Yeah.
with effectively like ownership in the platform. So like
Well,
I'm
not
not sure
only
if
that, a token is programmable, and so it can represent ownership, and it can be entitled to economic rights like a share, but it can also have utility as a community member and give you access to other things that just being an owner can't, right? And like an equity is limiting. Like a public equity is an amazing human invention that has created huge wealth and unlocked all sorts of other economic benefits. But it's dumb compared to a token, where like a token has all of this potential for customization that equity just does not.
it has alignment though, which is the thing missing in crypto right now for tokens. So I do think I
Mm.
agree with you. I think there is structural advantages to tokens if they're done the right way. I think that actually should give you a lower cost of capital. Like it should give you essentially a higher multiple because there's more pure play alignment. The problem is like current structure, the way a lot of these coins are structured right now, there is no real alignment. In which case, like equity, like you're seeing higher multiples in the equity markets than you're seeing in the token market, which I have
Totally.
not seen. I have not seen since we've been in crypto. Like you're seeing projects like MakerDAO trade at like, sub 20, 25 times P ratio, even though they're
Well, I mean,
growing.
Solana, I think like in Q1 did around $850 million of protocol revenue, right? Now, I don't know how to untangle like an earnings from that number, but if you just think of like that's fee revenue on the network that passes through to stakers. If there are no equity holders, then the stakers are the main economic beneficiaries of that. 850 million annualized, you're talking $3-ish billion of like top line revenue. Protocol's got a 60 odd billion or 70 odd billion-dollar market value. 30 was that 20 times or something sales, 20 times sales. It's not cheap or anything like that, but like that's kind of where it's at. Circle today has a sales multiple of which I think is actually higher than that, right? So some of these public equities are trading at multiples even on just basic sort of sales that are multiples higher than what we're seeing in crypto. I find that really interesting as well.
Yeah, no, that is like I think Circle's trading at like a like 100 times, something in the three figures mark of sales or something crazy like that. I think, yeah, I mean, I think like what you'll see is it's kind of funny. Like one thing that it reminds me of is OpenSea, for example, which is like the dominant NFT exchange. So from last
Yeah.
cycle, it was probably the hottest startup in crypto. Um, Everyone was launching coins, and they were like, "We're not going to launch a coin. We're going to do an IPO." And then now, now tokens have done really poorly, and IPO like public stocks have done really well. And like a couple months ago, they announced they were going to launch a token. So
Mhm.
that's just kind of like a random side note, but it is. I could see more and more projects, whether they already have a token. So that's also another question. That's sort of it's an open question in crypto. Like, can you be a public company while also having a token? We're seeing that. We're seeing the first kind of iteration of that with Tron. So Tron is launching a multi-$100 million sort of Tron treasury company, but it's actually
Mhm.
it's from like the Tron founder and Tron development team itself, which is quite unique. Most of these like treasury companies are like essentially third party businesses that are launching treasury companies, whereas this is the actual
Yeah.
development team itself. I think so. Yeah, like that's interesting because then the alignment question becomes even more muddled. Like which assets belong to like the token holders, which assets belong to the equity holders. And so, yeah, I mean, I think like that's another trend we'll see continue. And yeah, I mean, I think like if Coinbase, you know what I mean? Like will like another question I guess with this too is like, would Coinbase launch a token for Base if the market cap for tokens is low?
Mhm.
Maybe sense to never really launch a token for it. Like there's a lot of like, as this ratio goes higher and higher towards equities versus tokens, it sort of changes the calculus quite a bit. My hope is that it acts as like a forcing function, to force tokens to actually align the economics of their platform the token itself. So I'm kind of like bullish that I think that's like it's a good like I said, forcing function to hopefully and hopefully makes investors like more discerning as well. So I think like the days of just launching a token that like very, very loosely relates to the actual product itself are probably over. We're going to see, like the big test for this is going to be pump.fun because they're launching like their platform, they're launching like a token for their platform. And it's very unclear. Like a lot of people are sort of balking at the valuation because it's unclear like how the value accrual from the token is related to the product. I think they said like 25% of the revenue goes to the pump token holders, but that seems kind of arbitrary. Like, can that just be changed at will or not? Like, so I think we'll see. Like, I think that's going to be kind of like the big test. But yeah, I'm kind of hopeful that like the hyper liquid sort of token strategy is like the new meta. You know what I mean? Like, create value and distribute it back to the token holders and just have full alignment.
Well, certainly that would be good for projects that have real users and real utility, like sx.bet.
Yes, one can hope. One can hope.
What?
So we'll see. I think, yeah, we'll see what happens. It would be nice the market is definitely getting smarter and smarter over time. Like, again, the 2017 bull market, it was literally people raising money and then just taking the money and just like maybe not even building a product. The 2021 market, people raised money mostly from VCs, not from the public, and then built products. And even generated revenue, though most of the times it's very, very unprofitable revenue. I'm hoping again that this market is like, raise money, build a product, generate real protocol earnings, and then pass those earnings back to the token holders. That's kind of like the final stage in a way that sort of aligns value. So we'll see. Until then, it kind of makes sense to like, I think in a token market that's starved for alignment, it makes sense that people are turning to the equity markets, even though they're like you said, shares are dumber than tokens, but at least there's a question on alignment.
Well, they've got great alignment. I mean, it's one of the most incredible things that people have ever invented are liquid, regulated, public equity markets and, no fee, low fee brokerage accounts that basically allow any guy or any person with a few bucks to become a capitalist in a way, right? Like an owner of the means of production. Even if it's a small stake, it's truly one of the most amazing human inventions ever. And I think tokens can be that too. And to your point about, how they're structured and programmed, to me, it's like, shares, ETFs is another one. These are financial technologies. They're innovations, right? They're sort of inventions of the human mind that create, new ways of forming capital, of exchanging value, of distributing wealth, of increasing participation in ownership. That's what markets do. And tokens can do that on steroids because they're totally frictionless. They're global. They're programmable. They can do more than just align ownership. They can also align all sorts of other things. And I think that it's really just a matter of it's such a zag. Like for me, I'm, as you know, I started my career in the equity markets, and I still have firmly have one foot in each of these things. So it's funny to see like crypto go full stocks when actually, the thing that's so interesting to me, at least about this, is that tokens have so much more potential, I feel.
Yeah, what's interesting? I do think it's a kind of a good wake-up call for people who are in TradFi to get more involved in crypto. Like, I think like the merging of, as crypto has become more institutionalized, and there's sort of like a merging of like the TradFi worlds and the crypto capital markets, there's huge opportunity for people like yourself who sort of translate between both sides. I feel like up until now they've been like relatively segregated. Like every now and then you'd get a boom where the TradFi world would care about crypto, and maybe that's just like what it is right now. Like maybe this is just like the classic 4 or 5 year cycle, and we're just at the, we're at the top where people care. But it does seem like those two worlds are fusing more and more. And so if you're
I know, it's exciting.
Yeah, I think like if you're in the,
I feel like I'm bilingual.
Yeah, no, and it's good because I think there's more and more openness, at least from like, you're on the capital market side, I'm more on the founder side, and I'm definitely seeing a lot more openness from talking to founders and like VCs of projects going public through the capital markets. Like I was talking to a VC about some project, and they were essentially saying that like the project, which was interesting to them, was like a crypto native business, but they were essentially like, we're not going to launch a token. We're going to aim to be the first like publicly traded crypto native version of our like vertical. So like that was kind of one of the and the VC was really excited about that. And like, again, that's actually quite new. Like most crypto native projects, it's been the default that you would just tokenize yourself, and that's like, that was kind of like your strategy. Whereas more and more people are excited about going into the traditional capital markets, I guess.
Well, I'm certainly excited about it. And any, founders or investors that want to understand the public markets a little bit better and how crypto is being received, let us know at DeFi Decoded. I'm curious to talk to you and learn more about what you're thinking. Andrew, that was a really interesting discussion. Want to just wave goodbye to you? Can you just wave with your your left hand? Oh, there's something new on your ring, on your finger there. What is that? Yeah. Welcome to the club, sir. Welcome to the club. Yours is a bit shinier than mine is. Congratulations, Andrew. Don't want to dox you, but I know you had to celebrate a big milestone a couple weeks ago. Happily married. So we're very happy for you, the DeFi Decoded community, and me as well as your co-founder on this show and co-host. So congratulations.
Yeah. Well, thank you. I'm sad you missed the wedding, but someone needed to hold down the fort. So
yeah,
good to have you there too.
Someone needed to record the episodes. We could have done one from, wherever you were. But anyway, great to chat today, and we will chat again next week. We've got some great guests teed up in the next little while. Last week was an amazing episode, our 200th, with the co-founder of Say, which in the last week has gone up like 30%. It's the number one trending token. And I'm wondering if that has anything to do with the DeFi decoded effect, which is this new thing I'm going to coin every time something happens in the wake of an episode. But a lot of good episodes coming up in the next little while, so please tune in. That's it for this week's discussion. Make sure to like, subscribe, share, all that good stuff wherever you get your podcast. Helps other people find it. Until next week, have a good one. Cheers.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.